Hello and good afternoon to you all. I hope you're having a lovely weekend. It is Sunday as I'm recording this video, and instead of relaxing and chilling out, well, in order to relax and chill out, I was doing an analysis of the FTSE 100. So that's what I tend to do in my spare time. I love stocks and investing too much. But before we have a look at what I've done, I wanted to play a little game for you guys. I wanted to give you a few bits of info about a company, and it's up to you to guess which company it is I'm talking about. So, I'm going to first show you the stock price over the past year. This stock is in the FTSE 100, and it is, of course, one of the stocks that's going to be in this list, but you're just going to have to figure it out. So the stock was trading around at the start of the year about 2,800 pence, and over the course of 2022, it's increased by about sort of 16, 17% up to about 27% for, this is the year, not year to date. So if I make that a little bit bigger there, you can kind of see what it's done. And what other data have I got for you? So the next piece of data is you've got the market cap. So the market cap is 81 billion US dollars. So it's in US dollars, annoyingly. I kind of wanted it to be in pounds. So take off about 10% from that. So you're at about 74 billion UK pounds. That's the market cap of this company. And you can see the dividend yield's quite high, about 6%, 6.5% actually, and it was even higher than that, 7 or 8% 1 year ago, and a PE ratio of about 14. And the last bit of data I want to share with you, the CEO is Jack Bowles. If you know your companies, then you will know what company Jack Bowles is CEO of. And the company, my last kind of piece of info is the company was founded over 100 years ago, so 120 years ago, and it's gone through lots of little iterations. There's some mergers and takeovers which have happened, which have changed the name of the company, as you would expect. So if you guys like, you can pause the video, have a little think, have a little cup of coffee, and ponder on that one, and let me know in the comments below if you guessed this company correctly. So pause the video if you like, and then I am going to tell you which company it is. Okay, so for those guys who got it correct, really well done. It is, of course, British American Tobacco. The company has done pretty well this year. It's been one of the standout stocks of 2022 so far. You can see, but the majority of the rise was at the start of the year. See, from January up to kind of sort of February, March. Let me move that out of the way. Not that. Let me move this out of the way. Up to January to kind of like the end of January, you can see the stock performed very, very well. And British American Tobacco, or tobacco stocks themselves, tend to do very well during periods of high inflation because they've got very good power to increase their prices. So really well done for those of you who got it. You definitely know your stocks, and I'm going to be doing more of those tests with you guys, or kind of like guesses as we go in future videos. So let me just get rid of all this stuff here, and we will go on to the main event. Right, the FTSE 100. What has it been doing this year? Well, I downloaded the data up to the 15th October. In fact, I designed this spreadsheet because it's got a kind of running total of how we're doing. Now, who would have guessed the top company is BAE Systems Defence? So that might have been obvious considering that we have a sort of little kind of war going on between Russia and Ukraine. So BAE Systems has obviously increased as investors believe that BAE Systems is going to kind of benefit from that. So that's all kind of fine and well. And one of the top kind of things I found, which was very, very interesting, was that out of the FTSE 100, only 19 stocks are up for the year. which is crazy, right? There's 100 stocks and only 19 are up for the year. The FTSE 100 itself, as you can see, is sitting about 7.1% down. Now, you can see that the majority of companies that are up, in fact, there's only 11 companies that are above 10% up for the year. So if you're a stock picker, you might think it's really, really difficult. It's been really difficult this year. I mean, almost every single person is down for the year. But, these companies are big global companies that obviously can supply a lot of the world and aren't affected very much by exchange rates, as the UK pound has actually gone down quite a lot. So any companies making their money in dollars have done pretty well, and you can see a lot of oil and gas and mining taking up quite a lot of the top here. So I thought it was quite interesting to see. However, dividends have been paid. And the dividend rate for the FTSE 100 at the moment is about 4.5%. So while the FTSE 100 is down 7.1%, you can actually increase that number by about 4.5%. So it's not actually down that much for the year. And you can see some of these companies like Unilever, for example, probably have paid out a dividend to bring them up into positive territory. One of the companies which I want to highlight, which I did a video on before, is Aviva. And you can see Aviva sitting down here at a lowly 26.4% loss for the year. But actually, they've paid out a dividend of approximately 32% for the year. So they're actually positive. And that's not the case for most companies, but still around about 20% of companies are positive. Now, what company do you think is the biggest loser for the year? Now, have a wee think. Feel free again to pause the video and see if you can have a guess. Hopefully, you're not an investor in this company. If you are, then I'm sorry to say that it is down so much, but it's just the way the stock market works. And so the answer is Ocado. Ocado, which is the online grocery retailer. They focus a lot on automation of product picking. They have a massive warehouse where the majority of Ocado's value lies in their technology. So they are penning themselves as a technology company. What that, of course, means is they're making a massive loss. And while they're making a loss, they have debt, and that debt needs to be financed. And as interest rates are going up, that means that Ocado investors are less confident that Ocado can finance that debt. So Ocado is down 72% for the year. Sorry, my mouse was on that number quite a lot there. And behind them are lots of housing companies. So Persimmon is a biggie, down 57% for the year. So it's real kind of been a shame for the housing companies going down so much. If you've been an investor in these companies, then it's always, that's just the trials and tribulations of the stock market. But some of these guys are still paying a good dividend. Persimmon, I think, is around about 11 or 12% dividend at the moment. So surely you would think that people are looking at this price and thinking it's looking interesting. And Persimmon have no debt either. But with the housing market the way it is and anticipating a slowdown, that's why investors have reacted in that way. So with the FTSE 100 down 7.1%, excluding dividends, what would happen if you had invested £1 in every single company in the FTSE 100? How much would you be down? Well, you'd kind of expect it to be 7.1%. However, that's not true, because some companies are bigger and some companies are smaller. So the bigger companies will have a bigger weighting on the FTSE 100, which means that if a big company goes up a little bit, it'll affect the FTSE 100 more. Whereas if a small company goes up a lot, it won't affect the FTSE 100 that much. It won't affect the overall index. So if you'd invested £1 in each company in the FTSE 100, you would be down a total of 18%. So that just shows that a lot more companies have gone down than have gone up. It's just confirming, what we're seeing here, that 80% of the companies in the FTSE 100 are down. What it also tells us is that the bigger companies, the bigger market cap companies, are the ones that are at the top of the leader table. And that's because they've got more global exposure, they have got less risk to individual economies. And so we're seeing those at the top of the table. So hopefully you found that interesting. I mean, I certainly did, and that's why I did this video. So as you can see, hopefully you can sort of garner some investment knowledge for that. I mean, these sort of big companies are weathering the storm a bit better. Whether that means you want to be more invested in the bigger companies is kind of your choice. I mean, some of the smaller companies are looking better value now, so it definitely changes our view on our investments. So let me know what you think. Of course, as usual, you will see two of my videos across this side, which you can click on and like and subscribe down below. Hopefully you enjoyed that, and look forward to catching you on the next video. See you for now.